So we're live? Oh, there we go.
Welcome to AGORACOM Small Cap Best of the Best. This is our first live show that we invited people on to watch. I'm George Tsiolis, founder of AGORACOM, and with us again is our chief market commentator, Allan Barry Laboucan. Allan, say hello.
Hello, everybody. We got a great show today. There's definitely lots going on in the market, and we wanted to talk about what we're seeing in the market. When we have these big fluctuations in the market, that's time when people really need some direction. So George and I had a great chat yesterday to talk about this show, and we got lots to go over today.
All right, and I'm gonna point out the TSX Venture Exchange Index in a second, but let's talk about good news first. I want to talk about some good news first, because the point of this exercise is, and we're going to see the venture chart in a little while, that the venture chart is back to even worse than it was when you and I made a pretty epic call back in 7/11, which is the 11th of July 2013, where you and I came out like gangbusters, made some monster picks. Then it happened again during tax loss selling season last year. You and I made monster picks. You returned 47% in 2 months. I returned 33%. So combined, we had a 40% return.
6 weeks.
Now, now things are even worse. So, but first, let's talk about a couple of good stories out there, and I want to just go through them quickly about some information out there. And they are AGORACOM clients, but here's an example of some good news. First is Omagin. OMAG, trades on the QB in the U.S. on the stock symbol OMAG. They announced a massive $2.5 billion deal a week ago with the government of Oman, where the stock spiked from $1.50 to $3.90, came back to $1.90, and now it's sitting at $2.70 as we're talking. So this is a real deal. The company's only got 60 million shares outstanding. You got to do your own due diligence, and Alan's going to have his comments in a second, but this is a real deal. The company's been working on this deal for 10 years. They finally got it done. The Sultanate of Oman is a 25% owner in the project. Consolidated Contractors, one of the largest construction companies on the planet, is a 15% owner in the project, and Omagin owns 60% of the project. So not unlike some good mining deal that you see, where you've got big partners behind you. But take a look at their 8Ks. They have specific meetings, specific discussions with specific government ministers in Oman. So this thing is as real as it gets. And I just want to put on everyone's radar, because right now the company's trading at about a $50 million market cap, even less than that actually. And something to consider, Alan, but give me your thoughts, because I assume I'm horribly conflicted on my end.
Yeah, and George, I mean, just because they're a client doesn't mean that they don't have a story, and we got to hear that story. And I've really been kind of learning on the fly. You know this story inside and out. You've been following the company for a long time, and I think one of the things that kind of affected people's attitude towards the company is, it was kind of that the boy who cried wolf. They had been talking for a long time about getting this deal. We're going to get this deal. We're going to sign this deal. And now that it happened, I think that the market, there was the first day there was euphoria about the news. It spiked up, doubled its price in one day, and then it settled down. Now, for me, that's pretty standard type of a thing. I would expect that after a stock jumps like that, there's going to be some serious profit taking. There was a lot of trades happen. But having said all that, what really makes me interested in the story, George, is that this could, you've got a company here that only has 15 million shares out. They own 60% of the joint venture company that has the rights to this project. It's a phenomenal project in that it would really change the opportunities in Oman for things that happen, like they do in Dubai and places like that. They see that, and they probably want to see something similar happening in Oman. So yeah, I mean, it's a massive deal. I think that for me, the big milestone that I want to hear is, I want to hear the terms of how the financing is going to happen. I know that there's a big international investment bank that's leading the charge on it, and so I'm going to be eager to see how quickly that money comes in, because I would think that the big money They get a chance to look under the hood. They get a chance to look at everything really, really closely. And I think once we see that project financing in place, that kiddie bar the door, we could see some really big action with this. So, I see the action, and I got a little more excited as I saw it pull back. And I think that it's probably a good launch place from here.
All right. And last point on that, and then we'll move on to xylitol, is the fact that Imagine has BNP Paribas already announced as the company that's going to lead the syndicate, and they've already talked about an interview that we did earlier with them this week that they got the top 5 or 6 banks in the Middle East who want to take a piece of that syndication. So it doesn't look like it's going to be a problem, but still has to get done. But everybody, something to watch for, unbelievable news. And the third-party stuff is what makes me excited. And on that point, I want to move over to xylitol, another AGORACOM client. So assume I'm completely conflicted, and you got to do your own due diligence. But they announced some pretty significant news over the last couple of weeks, 10 days. The first was that they finished a $1.65 million private placement. What was really amazing about that is the fact that only 2 people participated. The chairman of the company took down $650,000, I believe, and Dundee, the agricultural component of Dundee, but Dundee itself took down the other $1 million. And Dundee now owns 30%. So you've got Dundee, who's increased their ownership to 30%. And you've got the chairman of the board putting in $650,000 of his own money. So if that doesn't tell you, if that doesn't give you a reason to go research it, then also understand that they just put out news a couple of days ago. I'm looking over the headline, and the headline is, xylitol engages Roche Construction for multidisciplinary engineering and construction services. In short, this is for their plant development initiative, and they're going to be putting together their own plant, and I'll let you go do the rest of the research on your own. But customers are Costco, Loblaws, Whole Foods. Revenues last year were $6.5 million. The company's already done about I can't remember, it's $4.8 million in the first half of the year already, 4.6 somewhere in there. So you can do some extrapolation because Q4 is their biggest quarter. But here's another company, revenues, third party, real customers, real product, which is a natural sweetener. And I want to make sure everyone knew about that good news. Alan, any comments there?
Yeah, that's a company that not only are they a client of AGORACOM, I use their products.
That's right. That's right. I forgot about that. Tell us about that side and why you use their products.
Yeah, well, because I'm trying to keep my sugar content down. That's a great way to do it. They cut it tastes the same, George. It tastes just as good as, like, for example, the ketchup and the jams and stuff like that. Tastes just as good as anything else, but it's better for you. So, that's why I use the product, the bottom line, and it tastes great, and it's reasonably priced, and it does the trick for me. I was really interested in that Roche announcement because, although they'll have to take some CapEx hits to get that built, they're doing it for a reason, obviously, and instead of giving away margin to having it processed somewhere else, they can process it in-house and capture that margin back. And I think that's a great move. I haven't seen all the numbers break out of how much CapEx it's going to cost and stuff like that, but obviously they've started to do the numbers, and it makes sense to have that in-house, and I think that helps the company grow to a new level.
Yeah, and that's one of those press releases sometimes where you read between the lines, which is, why would they be looking into this plant initiative if they're not confident that they can continue growing sales? And so far, year over year, sequentially, quarter over quarter, pretty monstrous growth at the end of the day. Doesn't mean they're going to be able to do it in the future. For all I know, they're going to do a big zero. Remember, I'm conflicted. They may do nothing in Q4, which is highly unlikely. But my point is, you can't extrapolate out with any certainty, but the trend looks good, and now they're hiring Roche, which is a very big, well-known name in the construction space and the engineering space. So, again, something to keep a lookout for. These are shining lights on the TSX venture, but you got to go do your own due diligence.
Well, if we're on the news of companies that we're conflicted with, I might as well throw one in there too, George. We just had news out on Dunedin Ventures that when we were able to close our first $1 million financing for the company.
Congratulations. Nice. Congrats. That's excellent.
You know, these markets are not that good, but we've been able to find a group that sees our vision that, you know, now's a good time to be building companies in a bad market. And, yeah, we were able to put $1 million to bed, and now we got some big work ahead of us.
I'm trying to find the Google effects here. There's a clapping thing here I want to give you, but I'll...
You could
just... here it is. Wait, hold on. Here it is.
There you go.
No, but that's a big deal. That's a big deal, because let me tell you something. We've got great clients at AGORACOM. We've got awesome clients with great projects. I mean, only the good companies are actually trying to do awareness and marketing and advertising. That's a natural assumption of all this, right, with what's going on there. And they're having trouble raising money. So just the fact that you're able to close your first $1 million is a really big deal. 4 years ago, they said, yeah, whatever.
Yeah.
Anyone's closing $1 million. Today, close $1 million at your stage.
Yes.
At your stage.
Well, it goes to the merits of the project, George. There had been a lot of work done on the project.
Well, give us a 30-second summary, the overview, where you guys are at right now.
Yeah, well, we just acquired. We turned it. It really was a shell that I got involved as a special advisor, and we were able to get a project. This project in the past had seen a lot of work, probably $20 to $30 million worth of work. But unfortunately, just as they were getting to the big tests on the kimberlites to tell the diamond quality and quantity, 2008 hit. So diamond prices collapsed, funding collapsed, and they ended up going bankrupt. The project came available. We did a deal with the guys that went out there and staked it, and now we can pick up where the other companies left off and go in and test these kimberlites. But what's really exciting is that in the past work in small samples that they had done, they found some multi-carat stones. So they've got some great. The project had great results in the past, and we're basically picking up the torch and advancing it further.
And stock symbol for everyone at home?
Oh, DVI, and that trades on the Venture Exchange. And yeah, the project's in Churchill, about 20 miles outside of Rankin Inlet.
And guys, you all know Allan. You all know the way he's been throughout his career, and you've seen the way he is on AGORACOM. So again, that third-party credibility. Allan, has other things he can do, and he's got going on, but he's taken on DVI, and that's reason alone for everyone at home to go do their research, look into it. You know, like we've always said, assume we're horribly conflicted. Don't go mortgaging anything. Talk to your spouse. Talk to your friends. Talk to your financial advisor. Don't do anything based on what you. But it is just a harbinger. It's a good lead for you to go take a look.
Yeah, and another thing that makes it quite dynamic right now, George, is a lot of commodity prices are way down. Diamond prices have recovered to those levels they were prior to 2008, and the supply and demand scenario looks like they'll continue to go up. So the timing is everything in the business, and DVI has taken over a project that had bad timing in the past, and now we've got great timing.
Okay, last great news that I want to talk about comes out of a AGORACOM client, Virtutone, VFX. Again, why are we doing this? Because things are bad on the venture, but there are, companies putting out great numbers, and these numbers speak for themselves. So the company announced last month that they did $11.4 million in revenues for the month of August, and they just announced their 6 months numbers. This is, again, about 10 days ago. They announced earnings of 2 cents per share for the first half of the year. So for the first half of the year, the company had $71.5 million in revenue, to be exact. And earnings per share of 2 cents per share, EBITDA $1.13 million. So those are real numbers. This isn't just George saying, "Hey, please look at a client of ours, a sponsor of ours, because they're nice guys." I mean, these are just real numbers, and the stock's trading 22 cents. You got 2 cents per share in the first 6 months. So again, you can start there with your research.
That's only 10 times earnings.
That's only 10 times earnings. That's only numbers. And those are only the earnings for the first half of the year, right? So let's say they do another 2 cents. I have no idea. I have no idea if they're going to lose 2 cents. They're going to make. So let's assume they do another 2 and they do 4 cents per share. Talking about a company trading at 5 times earning and growing pretty rapidly. Now, remember, I have no idea if they're going to do 2 cents per share in the next 6 months. They may lose 2 cents. So all it says is go do your research and find out.
I think it's a good thing for our shareholders, or our audience, that if they are following that company, go back and look at the last year that led to them getting this year 2 cents in the first half. If you continue to see that kind of growth, I think I might have lost George there. George, and I.
No, I'm here. No, I'm here. Just brought up my list for what we're going to talk about.
If you keep seeing those kind of fundamental improvements to the company, then it gives you a ballpark idea if they're going to be able to continue to deliver on their earnings. Yeah,
this is a company that did $2.5 million in revenue for the entire year in 2012.
Yeah.
So they're $2.5 million for the entire year. So now they're doing what, 11, 12. They've been as high as $15 million a month with 2 cents per share in earnings. So again, something for you to consider. Why? Because this is what's on the screen. You can see in front of you in real time what's happening in the markets. What we're seeing here is I want to bring up the venture exchange. So let me pop this open. You'll see it pop up on the right side. Take a look at that, Alan. All right. Wow. I mean, you and I know this, right? But here's 2014, kind of nicely moving along. It's not busting any records, but it was a nice recovery from what had taken place. Let me go back here. You know, nice recovery from what had taken place when you and I first started spotting. Yep.
Can you bring that chart out so it's the one we're looking at? Just the one we're looking at?
Yep. So I can do.
I can see it great, but I'm not sure the audience can see it.
All right. So let me do a screen share of the big one. You're right. Let me just do a screen share of the big one. Then let me get to you. So I got to do a little fancy pants motion here.
You like that Muhammad Ali quote there, eh, George?
Feel the pain today, be a champion tomorrow. Never better words ever said.
Your life.
All right. So let me share that. All right, so now you're seeing it?
Yep, there we go. Perfect.
All right. So that's the big one. Let me move it over so I can see you at the same time. But so here's what we're looking at. This is the TSX Venture. Look at, so first let's go back to where you and I, 2 years back in July of 2013, right here, here, you and I got together because we had seen each other in Vancouver here and said, this is crazy. We need to step up because this is just too cheap. And we had this massive move here, which doesn't look so massive anymore, but it was a massive move. Then we had this dip into tax loss selling season. You and I made a huge call on December the 20th.
Yep.
All right, so right around there. And look at that move. All right, so now I'm going to go to the one-year chart. So we're looking great. Everyone's looking great. So now here's the one-year chart, moving along nicely. We got some nice ups and downs. We knew that the sector was still fighting to catch its feet, but everything looked good. And then, it seems like once everyone got, that's August 29th right there. You can see that. That was the last time where I feel it's almost like the Titanic, the last time when the Titanic saw sun, because after that, straight down. I mean, straight down. That's a horrific drop. Even I haven't seen something that fast and that furious. So, Alan, I've got some ideas, but let's hear from you first in terms of why is this going on, and is this warranted at the end of the day?
Well, I mean, obviously it's warranted because that's what it's done, right? So, but what, I'm always trying to look at what is this telling me about the future. You see, what I see in there, George, is I look at it's contrary to it's consistent with what's happening with gold and other commodities. And they are running contrary to what's happening with the U.S. dollar. The U.S. dollar right now, to me, is one of the most, is one of the most assets with the most amount of hot air in it. There is hot air in the overall markets, and I've been talking about expecting to see a correction a lot lately. And the reason for that is just purely valuations. I'm looking at the valuations of the overall stock market trading at like 17 times earnings, somewhere in there. It's not that much over historical averages, but what is concerning me is that they're only growing the earnings about 10% a year. That doesn't justify a 17 PE ratio. And so the market to me is rich. Now, I'm not in the camp of anyone like, I was listening to Mark Faber. He was doing an interview on BNN, and he was talking about a 30% correction. I'm in no way, shape, or form in that kind of a camp. I'm just thinking that, you know, we're 10 to 20% overvalued.
So the rotation, okay, so it's overvalued, we get this correction.
Yeah.
These fund managers can't sit on cash.
Yeah.
So what do? They start selling S&P names, and they have been. Where are they going with that money? They sit on cash for a little while until somebody makes the first move and they all pile back in? Or do you think we're going to see a rotation? Because this is where you and I are going to have a debate. I think you're certain that there's going to be a rotation to the metals and commodities, but I'm not so sure. But tell us, make your case.
Okay, well, let's say I see a possibility of two things happening, George. One of them that I'm kind of discounting the potential is I think that we've now broken that upwards trend. I think we had something like 70 months without a 10% or more correction. I think that trend is now broken. And so where do we go from that broken trend? I think that we either see a sideways action or that washout, that 10 to 20% washout. I prefer the washout. I think it's much more healthy considering how long things have been going. There's a lot of hot money in there still. But then getting back to your question of, well, where do they put their money? Right now, a lot of people seem to be parking their money in the U.S. dollar. That makes me really, really worried. You've got a country that has close to $20 trillion in debt. The real unemployment rate, if you calculate in partially employed, you look at which is over 10%. You look at there's no wage pressure. If the economy were stronger, you would see real wage pressure, and there's none of that. You know, these.
Let me cut you off there. Okay, and we know that, and the case has definitely been made for. And I've been the first guy to say the data. This is where you and I take the opposite side of things. Agree with you that the data says things are crap there, but having said that, you can't fight the tape, right? It's kind of like how you said with the venture exchange, it's down, so it's warranted. So the S&P is up, and it's warranted because the question I have for you is, where else do you put your money on this planet? This is the problem, and I'm not saying that's a good thing, but where do you go? Europe, you go Asia, China's looks like it's collapsing. Europe is a disaster. Emerging markets, you know, you don't want to put more than 5 or 10% of your money there. So is it a case of they just don't have a choice and they have to keep coming back to the U.S.? And how do you fight that? If you're a fund manager right now, Allan, and you're managing $20 billion, where do you put your money?
I've always been a fight the tape guy, George. You told me that 2 weeks ago when we were looking at the Dow, and look at the Dow in the last 3 or 4 days, this week.
Sure.
Been under tremendous pressure. So it was a good idea 2 weeks ago to fight the tape. And because the assets are so overvalued. Now, okay, get back to your question on the U.S. dollar. Where do I put my money instead of U.S. dollars? I would much rather own gold. I would much rather own silver. I'd much rather own oil. I'd rather own copper. I'd rather own, like, I'd hate to quote Dennis Gartman, but I do like the quote that he makes, that he thinks he looks at things that if
so don't bring up Gartman, whatever you do. And while you're talking, I'm gonna bring up these quotes so everyone can see them.
Gartman is my favorite contrary indicator, but I do like his quote when he says, "If you drop things on your foot, it'll hurt." Those are the kind of assets that I'm kind of liking, right? You drop a barrel of oil on your foot, and it's gonna hurt. You know, you drop a bunch of gold on your foot, it's gonna hurt. Right?
Now, having said that, okay. What's really hurt, and you can see what I've just brought up here. You can see this chart here.
Yes.
This is the metal complex here. So I mean, look at, gold 1340 back in when you and I were arguing back in the summertime, straight down.
Yeah.
Summertime for silver, straight down. Platinum, copper, disaster. Palladium, it's done its own, but it's kind of held its own, but at the same time, it's not as big of a player. So
I'll show a chart.
Yeah, it hurts to drop it on your foot, but man, these things have hurt to to have now. They've had little bounces. Look, gold made that. I predicted. You got to give me the credit. I predicted, 1,800 gold would be 1180 gold would be the first stop, and it pretty much got down there. I thought it would stay down there for a while and base out, but we got this big jump.
Yep.
Where do we go from here? Would you be a gold buyer right now, or is this a dead cat bounce?
Here's why I say I'd rather have all those assets, George. Gold, the average cost of producing gold throughout the world right now is around $1,200. Silver is around $16, $17. Copper's around $280, $290. Oil's around $80. I'm banging the table on assets right now where it costs, that are trading close to the average cost of producing them. If I'm wrong, I'll only be wrong because the whole global economy hits the tank. And then I guess the U.S. dollar might be the only. But pull up the U.S. dollar now, George, on your chart.
Yep, I just pulled up oil quickly, just because I just happen to have it. So that's what oil's done since, over the last year. Let me bring up the U.S. dollar for it. And obviously, the U.S. dollar, look, this heat map here tells you exactly what's going on. That's a monster move. I acknowledge that's a monster move, and it could come back to it could come back to right here. It could come back to right here in the 84 range. Right here, I could see that happen. But this thing looks like it's got a full head of steam because QE is finishing, George, and that fundamentally should be bullish for the dollar.
I don't know if QN is ending or it'll start again. All I can look at is fundamentals. That's really what I can. And the fundamentals, there's no fundamental reason for the U.S. dollar to be performing that. Look at the Canadian dollar. We just added 70-some thousand jobs, which is a big number for us in Canada. Mm-hmm. And the Canadian dollar's down against the U.S. dollar. That tells me that the dollar is trading in hot air range. And you said last time
where should the dollar be? Because I think it should come back to 83. They were talking about the U.S. dollar. Well, you can see right here at 86. I think it should be back at 83.50, but not lower than that. But you're going to disagree, so tell me where you think it should be at.
Yeah, you got a longer-term chart there, George, and I think that if it got back into that range right there, so you see that range where it was going.
Oh, sorry.
Oh.
Yeah, so I brought it back for you. So go ahead. Where do you see it?
See that range where it was kind of going sideways for 10 out of those 12 months you're showing?
Sure. Right. You're talking about this entire range right here.
Yeah. Something.
So you think it should go back down to the 79 to 82 range?
Yeah. Well, I think that's more normal action. Look at your volume. All those guys, all those traders getting in there, and it's a hot air trade right now, George. Hot money. I always avoid hot money.
I disagree with the 80. I disagree with 80 because you got to remember this has been down here because QE was still alive and pumping, and now it's coming off. So I say 83.50. See this spike right in here? It had a nice gradual move, which was this you got to admit was acceptable. It wasn't a terrible move. Then had this massive candle, and then again. So if it came back right in here, but it ain't going below 83. I'm gonna tell you right now, 83 is gonna be strong support unless something happens. Now let's talk about the small cap. So now we're talking about the macro.
Okay, so now
that's the macro. So let's go into.
Well, I have to talk about the macro because
sure, of course,
the action is what's pushing down the price of those commodities. It's not because those commodities supply and demand has changed dramatically. It's just a trade. It's a contrary move against the U.S. dollar. And when an asset is that overvalued, you can either play it one of two ways. You either short the dollar with those ETFs. I'd even be bold enough to go into the three times kind of things, or you go long.
Triple bear U.S. dollar ETF, huh?
There is never a shortage of places to find assets that are beaten down in any market. Right now, there is assets that are dramatically beaten down right now. That's your commodity prices and your commodity stocks.
All right, so based on that, here's a list that I've got up for everybody. All right, so pay attention to this list right here. I'm starting to put together a wish list. This is by no means complete. I'm not buying any of these things, but this is I'm watching these to see what I can to see what I like when during tax loss selling, which I think is happening now. It seems like it's going to happen a lot sooner. But let's go through some of these, and let's take a minute on the couple that I point out. And then you're probably going to have a couple. One of them is
name association thing, and I know some of these names.
Fission uranium, right? So I'm going to keep the I'm going to do this so that the chart, we can see the names here and the chart pops up right here. Let me do the 1-year chart.
There you
Fission,
go.
What the hell happened? What, you and I were arguing about Fission a lot, and then but once it got down to the $5 range, I bought about 10,000 shares. Just started position, and then I bought another 10,000 at 83.
Yeah.
Oh, that way everyone knows. And now here we are today at 74 and 79. So I posted on Twitter a couple of days ago. 79 was a line in the sand that if it was broken, it was going to 65. And the reason I say that is 2 years ago, there was your 79. Resistance is now support. That was broken, and that's why I'm seeing this 65 area as the next. You're the uranium fission expert. Why is this thing getting so slammed even after it graduated to the big board TSX?
Yeah, in this case, I think it's just an example of how oversold the junior resource sector is.
Mm-hmm.
But it's not just the juniors, the big ones. The whole sector has been beaten up. But lately, it's been getting particularly that has gained momentum, like going down a hill. This isn't the only chart that looks like that, but here is how ridiculous this market is trading at. George, this is a world-class discovery. It's extremely high-grade uranium. It's close to surface. This will be taken over by a major and put into a mine in the future. I have all kinds of confidence in that, and I'm not just speaking out of turn here. You go and look at the massive amount of drill holes that they've had, and you can see that this is a big deposit of uranium. And yet,
yeah, I got to admit, listen, I agree with you 100%.
The stock's trading like uranium disappeared.
Fission is probably a classic example of a stock. This is a good quality because we always said the zombies and the dormants we want nothing to do with. So those are out. You're talking about 1,000 companies or 1,500 companies on the venture exchange we want nothing to do with. But Fission is at the top of the list in terms of project management, everything you could possibly want. And it's getting slammed. So because I'm going to load up again at if I'm actually hoping it does get to 65 cents. I'm hoping it does. If it gets there, I'm going to buy another 20,000 because that's how confident I am. But and remember, don't take that as buy advice because you got to do what you do at home. Look, I've already taken a hit on the $6 and the 83 positions. What do you feel? What would you do right now? Are you going to hold? Do you wait until tax loss selling and say, hey, could Fission get to 50, 40? Could it get there based on people just bailing out?
Spikes up and spikes down never last for too long. So you're asking me two questions there. One, if you're asking me, do I think that this has a chance to turn course and pop really soon? I do. But then you run into that issue of tax loss selling, because this is one candidate that could get some tax loss selling in November, because if you look, I'm not a big believer in all that tax loss selling in a bear market, because you've got to have gains in these stocks to sell against, right? And most of the resource stocks are down. So if the bulk of your portfolio is in resource stocks, you don't have many winners. But this is one where you look at all the volume that it traded. It was much higher than it is here. So I think there's a chance for a recovery imminently, and then some pressure. And then, this is also one that I would put, you've got it on the top of your list as tax loss selling candidates, and that's the one I would, we'll be doing a big bang on the table show in December. You can rest assured of that, and this will be one I'm very bullish on.
And take a look at this, then we'll hop on to the next one. But look at today's volume, 2.1 million shares. Average it does is 1.1 million over the last 50 days. So that's telling you, are we seeing capitulation? I don't know, but it's it's pretty scary what's going on there. Let's hop on to another one. So I think Santa Cruz silver mining. Do you know about? Was it you that put me on to Santa Cruz?
Yeah. SCZ,
right?
Yeah, for sure. Yeah.
I remember I bought Santa Cruz at 90 cents. I bought Santa Cruz at 90 cents just a few months ago.
Yeah.
And sold it just for a trade, like I do, right? Very tight controls. I sold it. So let's bring up the 1 year here because that's based on a 2 year. So I bought it somewhere here in the 90 cent range and sold it in the 97, 98 cent range. Happy I did that because kaboom again. Santa Cruz, you know,
silver play. They're not easy to find. Quality silver plays. They're one of them. Down in Mexico, they've got production. Yeah, I like this company a lot. I think it's definitely one you want to put in your candidate list for tax loss selling. It's another one that has a chart that could suffer because, you know, there are shareholders that own it at higher prices.
I mean, you're talking a stock that a year ago, this is pretty much a year ago here, was trading at 240.
Exactly.
You know, 230, 240 down 60 cents. So
you know
it's lost 75% of its value. And anytime something loses 75 to 80% of its value, unless it's junk and it's collapsed, I got to pile into it. So I'm going to be a Santa Cruz silver buyer.
The reality is, George, that they're a better company today than they were then.
Unbelievable, huh? So, you know, and I got to tell you, I want to have this conversation just extended a little bit. If this was the middle of the summer, if this was the beginning of the year, I would have put a lot of money out there right now. But here, I've never seen this before. I've never seen this kind of a collapse 2 months before tax loss selling. So my concern is, am I buying Santa Cruz at 60 thinking I got the deal of the century and it's sitting at 40?
Well, you know, George,
do you see a catalyst between now and December, or should we all just be patient?
Well, catalysts are always difficult to pick, but my biggest catalyst is spikes. I look for spikes in the market, George, and I know if they spike up, like the U.S. dollar is, those don't last very long. When other assets spike down, that move is more about emotions than it is about reality, and those don't last very long. So for a trader, I think you've got a window of opportunity for a pop here prior to some more pressure, maybe in November, early December, and then I think you can trade in it, out of it, build up some cash, and get ready for the late December kind of action.
And that's exactly what I'm thinking is going to be my strategy. Buy one more position of Fission at 70. I'm almost certain that we're going to get a pop into the mid 80s out of Fission, and then potentially get another drop. So because I don't think the pop will last through tax loss selling. So that's how I'm going to play it. But I want to run it by you.
Yeah, I wouldn't disagree with that trade mentality right now.
I mean, here's an example, Seabridge Gold, even though I want to talk about Banro in a sec, but Seabridge Gold here, take a look at what it did. So I'm going to do a 3-month chart. I'd set my alerts to anytime it got below 750 to pick it up, and it got down to the low 747, and I just didn't act in time because I wasn't around. And kabang, there's a pop right up to 825. You know, talking about 10% pop in a day or two.
Yeah, that's the gold. That's gold starting to rally after it gets down to that 180 or 1180 range, and then it off of that. Don't forget, we'll talk about that too later, George.
So I'm going to summarize like this. I won't go through all of the rest of them, but I just want to bring up some names. Tamarack Valley on a technical.
I think that I like the technicals on that Tamarack Valley.
Yeah, Tamarack Valley looks like it's prime for a pickup. So that's high on my list, and it's a big energy producer. Our good friends at Timmins Gold, trading at $1.37 in the U.S., in Canada, sorry, and $1.23 here. Now, the reason I want to pick it up in Canada is look at the most of the volume is still done in Canada by more than, almost 3.5 to 1 or so. So, but I think it might be early on Timmins Gold because we saw it last year get down to $1. I think if I remember correctly, I picked it in my tax loss selling competition and did very well.
Yeah.
BSM is on my list. We were banging the table. I was banging the table from $2 when it got to $3.50. I don't know what's happened over there. I don't know if somebody knows something that the rest of us don't. but the company's putting up phenomenal numbers. That financing seems to have killed them. That they did. I don't know why. That was just the beginning of.
If they were a company that raised money and didn't use it very well, I could understand that. But this company is very efficient at using their money.
This is where they did that financing, and we thought that was a great move. And ever since then, it's been down here, talking about 50% pop. So it's on my list because it's technically completely broken right now.
By the way, there was an interview just earlier this week from the president of BSM was on BNN. And,
I didn't know that. What do you have to say?
He talked about the fundamentals of the company and what they're doing on growth, and these guys got a great business. It's one of those sleepy kind of businesses that one day somebody bigger is going to come along and say, well, we got to take these guys over.
And let me just for everyone at home, they're in the GPS space, a lot of fleet tracking. New York City subway system. New York City subways is one of their clients. Because nowadays, big companies, big organizations want to track their assets. So if it's New York City subway, they need to track their cars. If it's a big transportation company, they need to. They got 5,000 trucks on the road. They want to know where they are, and not just where they are. Sorry, Alan. I want to make sure everyone knows this. It's not just not where they are, but it gives you the metrics on every single truck. You talk about a couple hundred metrics, so I know if a certain truck is idling for too long, revving too high, speeding too fast, and making my business inefficient. So the technology is phenomenal because the ROI on it is phenomenal. You have every reason to buy it, and yet it's taken a massive hit. My last one is Avalon.
Look at their customers, George. You look at you always hear about big data. These guys are big data business. And I'm a big bull on big data business because you can eke out that extra margin, and what business doesn't want to, instead of throwing money away, keep that money, and that logistical stuff is a great way to do that. So yeah, I'm still bullish on GPS long term.
And the last one I have is, and you got some interesting comments on this actually. Close and dear to my heart because I started, Avalon was a client of mine. I'm going to do a 20-year chart because I think they were a client of mine about 12 years ago.
Yeah, and I know Don Boubard too, and Don's a great guy, and a real good executive. Runs the company well, but they've got some problems. They had some news out this week that they had to, they basically had to kind of not abandon, but move away from their key asset and focus on another asset because they're unable to get the funding to bring their key mine into production. The reason that they're having a problem, George, is it's a $2 billion CapEx expenditure in order to bring that thing into production. That's a pretty big, that's a lot of money in any time, even in a when you got countries that have $20 trillion in debt. $2 billion is still a lot of money, and you made a point that in the next 5 years you think that this could be a mine and that it will get funded, and I could make that argument too. I would say that you look at rare earth elements outside of China, and there's a lot of strategic reasons to have some more of that production happening in North America. Avalon has a great asset, but nobody wants to give them any money to fund it, to build it.
Now, I want to take a quote from the press release, though, where they say right here, however, the company remains optimistic that rare earth demand will recover sufficiently in 2015 to attract project financing and allow construction work to begin by next summer. And, like you said, Don is a pretty stand-up guy. This isn't just, jawboning for the purpose of trying to give the market wishful thinking. So for Don to make a statement like that, I got to tell you, doesn't this price of 26 cents make us? I mean, look at this chart. Look at this 10-year chart. Look at where it rocketed to. So we're happy to be part of the company's growth, even way back here at 12 cents. So we're back here at 12 cents, up to $2. This is where they left us because then they went on to the New York Stock Exchange. Yeah, we had the financial crisis, but then look at that. All right. So, how can you?
George, we need strategic reserves of production outside of China. You don't want to have one area controlling all key commodities. The key commodities there are really important in a lot of things that we take for granted these days. Televisions, computers, watches, automobiles, everything needs rare earth. And the shift is to use even more. You look at companies like Tesla. You know, they need more rare earth elements. So it's a bit of a mind-boggling opportunity to me. I mean, I can't understand. You know, you and I can see this, George. Why isn't somebody going in there and offering them 50 cents a share and they own this wonderful asset? It's a bit of a conundrum.
Probably because, I don't know, that would probably start a bidding war at the end of the day. But here's my call I'm going to make.
So what's the end of the war? 80 cents? They've got a multi-billion-dollar asset there.
And you know what did I say earlier today? I posted market cap is at this price, $33 million or something.
Exactly.
All right. So here's my call. Arizona Star.
Yes.
What do I mean by that? Okay. In the .com days, and I'm going to take off the screen share for a second here so you can see my face. All right. In the .com days, Arizona Star Mining was trading at 25 cents during the .com days. And I remember it was a fantastic project. Can you see my face, by the way? Am I back? Am I off screen share?
Yep.
And it was trading at 25 cents. And I looked at a buddy of mine and I said, "This is insane. This is insane." And we're making 100% a day in these .coms, right? It was crazy. So nobody wanted to wait 5 years for someone to try and pull some stuff out of the ground. And I remember looking at my buddy and saying, we should buy $5,000 or $10,000 of Arizona Star and forget about it, and just let it sit there. And sometime next 5-10 years, you know, we're going to make a lot of money. We're going to make And I remember back then saying it's going to go back to $2, $3, $4.
Yeah.
Right? I remember saying that. Never did, because at the end of the day, 5-10 grand, waiting 10 years, forget it. You know, there were times we're making $50,000, $100,000 a day back then trading .coms, right? I mean, quite often. We're not talking about, so who cared about 5 or 10 grand, right? Well, Arizona Star Mining was sold for $17.50 in 2008. So 4 times 17, do the math, 68 times. Did I get my math right? 68 times your money. So that 5 grand would have been worth close to more $340,000, right? $340,000. I'm not telling you that Avalon's going to go to $17 in the next 5 years.
But you're putting it on your Arizona Star.
But I think Avalon is the next Arizona Star.
George,
people are going to look back and say, at 25 cents, I could have bought this thing at a $33 million market cap, and I didn't buy it. It's
a great analogy. It's got a great deposit. It's got an asset that is needed. It's got assets that are growing in demand and will only continue to grow. The more that we look at alternative energy and all these other things, they need what Avalon has. So, you know, I don't think it's out of line to say that, you know, this is call it your Arizona Star potential mover, whatever you want to call it. But I don't think you're out to lunch on it at all, George. It's a world-class discovery, and I look at these world-class discoveries right now, and it's mind-boggling. I can't believe how little these companies are trading for what they have in the ground, assets to a market cap valuation.
Yeah, I'm shocked. Come on, Avalon's got a $35 million market cap right now. This is a joke. Yep. Considering the size of their Nichalachacho. I always butcher the name. But that rare earth deposit, plus the other stuff they've got. But that itself is just too big. So it won't be a fast trader. This won't be something that you pick up at 25. I don't know. It could get back to 50 actually pretty quickly. Yeah. I wouldn't be surprised. But I wouldn't bank on that.
Put it on your list. I definitely put it on your list for the tax loss selling show.
I wonder if we're getting there already, and I'm gonna finish off with this, because this is a U.S. trading company.
By the way, that's
a lot of U.S. funds have to sell in October to get their tax losses, just the way their year ends work and blah blah blah. I think we're seeing it right now.
You know, George, you can book your tax losses any time of the year. Not all people wait until the very last minute.
Yeah, but funds have to do them by October 31st. There's something in the accounting rules, the way funds work. They've got to sell their stuff before the end of October in order to book their tax loss. I'm not sure why. I don't know why it is that way, but I know a lot of funds are like that. So I think we're seeing it happen now. I think funds are just throwing up their hands. Why? They've made a ton of money on U.S. stocks. Going back to your theory earlier, they've made a ton of money on U.S. stocks. So they might as well write off Avalon right now because it's like, forget it. You know, they might get financing in 2015, and they're going to take the loss. So I think we're seeing it now. I want to make a buy, and I want to sit on it for the next 5 years. I think this is going to be my Arizona Star. I don't know if it's going to go $17, but hey, I'm going to say here what I said about Arizona Star. It's Allan. Can it go? It's got to go back to $2, $3, $4.
Yeah,
that's not out of the question at the end of the day. $2, $3? Is that out of the question? I don't think so.
No, not at all. Not at all. That would still be reasonable.
So $25,000 investment just to let it sit. What's the risk reward? I lose half. So I can lose half. It can go down to 12 cents. Let's just say it can go down to 12 cents because there's more devastation next year. All right, it can go down to 12 cents. So I can lose half, or I can make 10x. I think this is a 50%. This is a half loss or a 10x the other way. And I love Don Bubar. I love the metal. I love the project. Love everything about these guys. I think I'm going to put down 25 grand as a lotto and let it sit there for the next 5 years.
Hey, George.
And my mortgage comes up in 5 years. So
there you go. Pay it off.
This is going to be the mortgage pay. This is going to be the mortgage payment right here.
Burn it. There was one other thing I wanted to talk about before we close the show, George. We were talking about when we were getting ready to do the show. We were talking about some technical indicators on the big cap market and the gold. So let's talk about that a little bit. You know, some of the things that I'm looking for as far as technical indicators on the big cap market. You gonna pull that up, George?
Let me see. Let me pull up. I've got a gold chart that's pulled up.
Yep.
All right. So let me pull up here. You want the S&P or you want the Dow?
Either one. It doesn't matter. They follow a similar path.
Let me do the Dow here.
Okay. So what I'm seeing, George, is I'm always you sort of ask me, well, what kind of indicators am I looking for? Okay. So with gold price, it did that dip down to 1180, right? Now, you know, I want to see it start to make higher highs and higher lows. The critical point that I'm looking for, like today we came off, yesterday gold was up 20-some bucks an ounce. Today, or up 20-some bucks an ounce, or around 20 bucks. Today it pulled back around $4. I'm always looking for the pullbacks to give me confidence. So if I see the next pullback in gold stays above 1200 and then it makes another high, I think that trend that I'm looking for it to get more bullish has started.
Well, let me bring up this gold chart here for everyone sure. to look at. I'll bring that up first. All right, so this is what gold's been doing over the last 6 months.
Yeah.
You can see this breakdown here. This is where you and I were having these big arguments, and we're here and here. And I was talking about, you know, so we've got here.
Yeah.
So here's the first capitulation point. Here's your recovery. You're looking for it to come back, but to make a higher low.
Right.
You're looking for it to stick at 1200, not get down here. Look at this tail here. So look at this green candle, right? And look at the tail right there, if you can see it, right? How it tried to dip, and then it's taken off since then. So I'm in the same boat with you because you know I was bearish gold. I'm just glad gold is back in the game, first of all, because I like gold at the end of the day. Just, you know, I knew it wasn't going to do well. But for you, if it gets back to 1200 and sticks, what do? You buy ETFs, you buy the miners, what do you buy?
I'm a stock picker by heart, George.
Mm-hmm.
So depending on your level of risk tolerance, if you want to play my call that gold's going to get stronger but you're less risk, I would say gold to something like Gold Corp. Okay? G is their symbol. If you're looking for something that has some more risk, but potentially will outperform the price of gold quite significantly, I would go to something like a New Gold. Now, I'm a pretty bullish guy, and I'm pretty aggressive too. So my play on it, and our risk tolerances are different. I'm looking at the smaller ones. I'm looking at the Rubicon RMX. I'm looking at Midway becoming a new producer in Nevada, MDW. I like Rubicon RMX because they're going to be a new producer in Red Lake by this time next year. I like Premier Gold a lot. They've got 3 multi-million-ounce gold deposits. I like their asset base. PG is their stock symbol. I like PLG because they're a new discovery of gold down in Nevada, and I like their partner NEV. So
if you had to pick two, though, if you had to pick two, if you had to pick 2 horses, who would you be putting your money on?
Premier Gold and Rubicon.
You want to bring up a chart? Can you bring up a chart for Premier Gold and Rubicon?
Yes, I can. Hold on.
You got your trading view, right?
Yep. Just give me.
All right. So while you're bringing that up, while you're bringing it up, I'll talk about what I'm seeing here. So this move to this point was expected. I actually made this call a few times, so it was just above 1180, and I did say that if it broke 1180, then we could be looking at 1100, but we didn't break the 1150. Sorry, and I said at that point I'd be a huge buyer at 1150. We had this massive spike higher, which I don't think will last. I think this was a bit of a relief rally, but like Allan says, I do want to see what happens. So I'm going to sit back and wait, and then move. So you got your charts up. So show us what you got.
Okay, so I've got Premier Gold here, and oh, you can't see my pointer here.
Yep.
Oh, can you see me pointing around there, George?
No, I can see the chart, but I can't see you pointing.
All right, perfect. Here, I got to go here. So, well, we've seen a lot of stocks fall out of bed and get hammered quite dramatically. This is a very bullish chart. You have a low back here in December, had a big, beautiful rally. It came back, went sideways, had another beautiful rally, came back. I'm looking for the next sideways action for it to come out of there. The assets that this company has are just quite spectacular. I think that, that they're looking for 3 deposits in the 5 million ounce range in total, each one of them. So this company has a great group of assets, really well run, lots of money in the bank. I'm a big fan of you and Downey and the team that runs this company. So if you're going to pin me down to a couple of picks, I'm going to go with Premier Gold. And
you be making that buy here at these levels, or are you waiting to see what happens at the end of the year?
Absolutely. No, I'd be buying right here. I think gold, I'm a little different than you, George. I think that what we've seen is the capitulation and it getting stronger. Now, I will change that opinion if I see the next pullback takes it under 1,200 significantly. I don't think that's going to happen, but you got to watch those situations. So, like George always says, make sure and put your stop loss in there as well.
Yeah, personally, I'd be waiting to see what happens to gold. I think gold's going to come back, and you probably pick up Premier Gold in the 220s. In a best case scenario, in a worst case scenario, maybe even better if gold continues to slide.
Sure.
But that's what I'd be doing. But I'm a trader, and Allan's more of a buy and hold guy.
Yeah, I'm buying this. I'm buying these because I'm looking for a swing. Here's another one, Rubicon. Why I like Rubicon so much is I'm a big fan of gold in Red Lake, Ontario. It's the highest grade gold camp in the world. This company is going to be the next producer in Red Lake. There's only one other producer, Gold Corp. And guess how Gold Corp got to be Gold Corp? They started producing gold from a great discovery they had in Red Lake, and the rest is history. I bring them up for a specific reason. I think that Rubicon could be the next Gold Corp type company. They'll have a low-cost production, a fabulous moneymaker. and I think that that will launch the company to be significantly larger. So I like Rubicon as well. If you're going to pin me down to a couple picks, this one would be another one that I like a lot, George.
Even so, at these prices, you're a buyer.
Yes, again, I think that the turnaround is happening in gold, and I'm gaining confidence here.
All right. We'll end it there, because Thanksgiving weekend is coming up, so we got a lot of digestion to do of the information. Bottom line, I think we can conclude, though, between you and I, is we both agree, even though we may have different timelines, that there's an opportune time to buy some pretty incredible companies that are being
absolutely
I'm going to be a little more patient and wait, try and get some better. My method of attacking is just waiting for it to see who drops at the end of the day, right? Because somebody's going to get beat up bad that we don't expect, and you just don't know who it's going to be. So I'm more likely to wait a little bit and be a vulture. Whereas Allan likes what he sees now, and he figures, a year from now he's going to be much better off buying at these levels, and you can't argue with that either.
Yep. Sounds like a good close, George.
So that concludes the show for today and this week. Thanks for joining us, everybody. Hopefully a few people got a chance to tune in and watch us live. I don't know how to watch that, how to check that out in real time, but we'll find out how many people are watching it in real time.
We're going to try to get this on a schedule so that we can promote it a little more than 10 minutes, a few minutes before we go live.
Yeah, that's true. We just got to put up on Twitter, and everyone said, here you go, because put it out on AGORACOM and let everyone know that, hey, here's the time that's happening, and give everyone more than enough notice and time to come in. But hopefully it's been a good show for everybody. Always looking forward to your feedback either on AGORACOM or on Twitter. You can find me. I'm AGORACOM, and Allan is Allan
B Reports.
Allan B Reports at Allan B Reports. Thanks for joining us, everyone. Have a great Thanksgiving for our Canadian friends, for our U.S. friends. See you on Monday. Allan, have a great long weekend, my friend.
You bet. Everyone, have a great. All our Canadian friends have a great Thanksgiving, and in American friends, you can do like I do when it's your Thanksgiving. I have some turkey on that day as well.
All right. See you, everyone.